Sometimes a very well thought out plan turns out to be a really bad plan. And that's why I'm a hedger. Here's what happened. We sold, picked up our position, and we had a buy stop up above it. So the idea behind that was to give it some breathing room and allow it to come down and catch a clean trade. It didn't. It went up, and in order to protect the position, the original 10,000 unit position, I went long. And now what we're at is almost exactly in the middle of our hedge. So our long position is out of the money 14 pips, and our short position is out of the money 17 pips. It's fine. We're protected. One thing I want to point out is I have a negative open profit on both positions. So currently it's negative 11-ish dollars on the long side and negative just over 12 bucks on the short side. That's the drawdown, and it's stagnant. That is not moving really unless the pip spread widens. It might see it just breathe a little bit, but that's basically a locked in drawdown. Now let's fill out our hedge calculator. We've got 10,000 units on the short side. Remember, red chart is for short positions. Red on my calculator is also for short positions. I have a 10,000 unit position on the blue chart, which means I have a 10,000 unit position on the calculator. I have a balanced hedge. It says balanced. I'm holding equal amount of units on both sides, both long and short. So I've decided that I'm willing to trade up to 12,500 units total. That's my max position size that I have decided I'm willing to trade up to. I only am holding 10,000 units in the market. So I have an additional 2,500 units that I could potentially trade if I wanted to, which would be inside my risk tolerance and the amount that I'm willing to trade up to. Market came down, it got into the money, it looked pretty good, and then it went straight back up and picked up almost to the penny my long position, went a little bit above and beyond, and then jumped back off the cliff. So I'm about 30 pip hedge from one side to the other, and we're kind of sitting right in the middle of that. Now what I'm going to do is wait for one of these positions to get into the money. Eventually, it'll either come down or it'll go up. But I have an equal balanced hedge. I've exposed myself to the amount of risk I'm willing to take on, and now I'm just waiting to trim that hedge. Let's answer a few questions in the comments. And I apologize for not being more clear on this. The first question I want to address is, are you using a single account for hedging, and can you open both long and shorts on one account? I want to be very clear. You cannot have a long position and a short position in the same account in the US. If you're trading outside the US, you can just fast forward this comment. You have to have separate accounts in the US, an account for long positions, an account for short positions. So at my broker, I have sub accounts, a sub account for long position and a sub account for short positions. They're independent of each other. They're not on the same chart because they're not the same account. It would be like having two different brokers and having one broker for long position and one broker for short positions. You cannot have a long position and a short position in the same account in the US. They must be separated. So on the layout, I have a blue chart. This is for long positions. This is a separate account. You can see on the bottom, it has right now a current drawdown of $10.43. That is independent of my short account, which is the red chart. This is where I'm going to hold short positions. That currently has a drawdown of $12.87. They are completely separate accounts because you cannot hold a long position in the same account as a short position in the United States. If you had a short position and you went to open a long position, all it would do is close out your short position. You can't have them being held simultaneously. So if you're trading inside the US and you want to hedge, you have to have sub accounts or separate brokers or something along those lines. You just can't have them in the exact same account. All right, the second comment that I want to take a look at is one person wrote, "Why don't you put a buy stop as a stop loss order on the short chart since you also are fine with take profit orders there?" Not being rude in any way, sort of form, but I have never understood people talking about hedging while buy selling the same pair. For me, you did not show a hedge, but a stop loss order. A stop loss order and a buy stop order are not the same thing. I'm going to actually use your line. I'm not being rude in any way, sort of form, but those are two very different orders. A stop loss order will close out a position. A buy stop order will buy a different position. So let's pop on the chart to explain this. I had an order that went short. I put a take profit in, which in your comment you said I'm willing to use a take profit. I am, because I want to close out a position that's in the money. Take profit on that position. But if that position goes out of the money, I don't want to close that position. I want to protect it with an equal balanced share unit on the other side. That way I can work my two positions. So I had a buy stop order, and now I have a 10,000 unit position on the long side, and I have a 10,000 unit position on the short side. By definition, that is now a hedge. You can call it anything you want. Maybe it's not hedging because you said hedging is across multiple currency pairs. That's actually true too. You could buy USDA CAD and then you could buy the Euro USD, and those two work opposite of each other. That could also be another version of hedging. The the downside for me, the reason why I don't hedge across different currency pairs is those positions will not move exactly the same. You do not lock in a loss. So you do not put your open profit to the amount of risk you're willing to trade and lock that in until you find a different opportunity to make a trade. So now that I am hedged, if you will, on the exact same pair, this market can go 5,000 pips one way or 5,000 pips the other. And my net profit or loss between those two positions would be the exact same no matter where it goes. And I can now make a decision on which side to drop and win. So then what we'll do is we'll take a profitable position and we'll trim a losing position. So to answer your question, the reason why I did not put a stop loss order in, had I done that instead of a buy stop order on a different account to set up a hedge, I would have taken a hard loss on this position and had no open positions. Maybe that's the way you want to trade. I'm totally cool with that, by the way, if that's how you want to trade. I'm personally a trim the hedge trader. So I wanted a long position and a short position, and I'm going to trade and work my way through that. Just to recap on this current setup, this current trade, this current position, I have a short position in one account that's short 10,000 units. In a separate account, a completely different account, I have a long position for 10,000 units. Those are not in the same account, but they're on the same pair. And so I have locked in a current drawdown. So this $12.65 on the long side and this $10.80 on the short side together equals what? $22, $23. My net drawdown is $23. And that market can move up and down, and that will become a stagnant spread. Eventually, one of these positions will get in the money. It could be the short position, it could be the long position, and I'm waiting for it to get 30 or 40 pips in the money. And then what I'm going to do is I'm going to take that position that's in the money and I'm going to apply part of that profit to the position that's out of the money, and I'm going to trim that position. If this is really brand new information, there's other videos on the channel. You can go watch it and I kind of explain it in detail. Or you can hang out and wait until one of these positions get in the money and I will actually show you how to trim the hedge.